Financial planning and home ownership, a very interesting combination and topic. Hi, I'm Patti Handy, financial coach and mortgage advisor. This information is for educational and instructional purposes only. Please make sure you reach out to an expert that you are working with, whether it be a CPA, an attorney, financial advisor, to get further information. Feel free to reach out to me as well. Happy to help. So if you're looking at buying a house, there is a lot to consider, especially if you're a first-time home buyer and the world of mortgages is new to you. So one of the first fundamental things that I want to talk about is the importance of making sure that you buy something that is going to be affordable to you, not just from the mortgage perspective, but for your lifestyle. I have seen families in the past purchase homes and become house poor, or I point out to them, you're going to be house poor if you purchase this price of a home, given your lifestyle. The kids are in sports, you like to travel, whatever other, if you've got responsibilities with your parents or anything else happening in your personal world that are financial pulls on you, you want to make sure that this house is not going to strap you down so uncomfortably that it becomes a factor and a stress inducer. This is not what you want. One of the other things that I want to make sure you do is you start out with an emergency fund. I mean, it's one thing having a down payment and saving for a down payment in that, for the house. And for that, I recommend that you do an automatic saving plan and start as early as you can to start putting money aside every single month to build up that down payment fund. Obviously, the bigger the down payment, the smaller the mortgage, so the smaller your monthly payment. But the emergency fund is also very important. When you close escrow, you're going to have not just your down payment, you're going to have your closing costs and other expenses incurred along the way. But you want to make sure you don't have nothing left when you close escrow. You want to make sure you have that, 3 to 6 month reserve of emergency fund sitting in an account. Why? Because stuff happens. It was probably 2 or 3 years ago. In 1 year, I had every appliance in my kitchen die. My refrigerator, my dishwasher, my oven, my microwave. Everything died in 1 year. And it was like, oh my gosh. And the prior year, I had roof leaks. So I had, 2 years of a lot of money going out that was unexpected, which was lovely. Not. Anyways, the point is that stuff happens, especially if you're buying a house that you don't know if that property might need a new roof a year from now or 2 years from now, or maybe you want to put a pool in. That isn't really an emergency fund, but you have these expenses that come up that may not be necessarily something you're thinking about today. So get your emergency fund set up separately from your down payment. Your debt to income ratio is very important in terms of the lenders looking at qualifying you. So the debt to income ratio, I spoke about this in another video, but I want to go a little bit deeper here. So your debt to income ratio is your monthly obligation on your housing expense, which is your mortgage, your property taxes, your home insurance, your HOA dues. In addition, it factors in any other expenses that you have on a monthly basis. So a car payment, a student loan, a boat payment, RV, motorcycle, anything of that nature that you have a monthly obligation to, that's going to factor into your monthly debt to income ratio. They use gross income per month as far as that calculation goes. But whatever we can do to work with you to lower those monthly expenses. Maybe it's a credit card that we can bring down a little bit before you close so that we can, maybe put you in a better position to get qualified. If you're, a year away from paying your car off, maybe we look at ways to, work around that and either accelerate that or, there's creative ways to do everything. So work with a lender that you trust and that is able to look at your entire financial situation and be creative in putting you in a position that you qualify for, and you also close escrow without those other obligations haunting you. There's different mortgage options. You have the standard conventional loan, you have the FHA, you have the VA, you have various first-time home buyer programs with grants and whatnot. But again, that's why you want to sit down with a lender. Programs are always coming out, new programs older programs that have 1% down, 3% down, 3.5% down, bank statements for self-employed individuals with no tax returns. There's always new programs coming out, and there's always updates. So make sure you again speak to somebody who is very current with the mortgage options for you, so they can help you understand that. And then make sure they understand your entire financial picture. As a financial coach and a mortgage advisor, I look at the holistic financial house, so to speak, that you are going to be creating for yourself. I don't want you to be a person where you come into buying a house and then, again, like I said at the very beginning, house poor. That just creates stress and everybody's unhappy, and that's just not good. And I want you to be able to travel if you want to travel. I want you to be able to put your kids in sports. I want you to be able to set up, investment accounts for your kids to go to college or whatever the, situation might be. We look at everything. We're not looking at just the mortgage and just the house. It's not just that one little piece of the puzzle. So look again, long-term goals. And if you're nearing retirement, if you are preparing for retirement, what are you putting aside every month for retirement? That's all, very important for you to stay on track in a holistic, full view, not just, again, just the house. So at the end of the day, I'm going to encourage you to seek professional advice, speak to a mortgage lender who is experienced. I would also recommend that you speak to your CPA to understand your tax situation. Speaking to a financial coach like myself would be great, who also understands the mortgage side. Perhaps your financial advisor can assist with that. Maybe an attorney, estate planning attorney, if you've got a working relationship with an attorney. Just seek the advice, crunch the numbers, don't rush into anything. Make sure you feel very comfortable about that decision and what you're doing and that purchase price. I heard this recently. I can't take credit for this, but oftentimes people say, well, the rates aren't where they, I want them to be. Well, the little saying that I heard recently was, marry the house and date the rate. Meaning, if you love a home and you want to buy a home, marry the house, buy the home, and if the rates aren't ideal, get in the house and then refinance later. Where, as rates come down, you can refinance later. You're not stuck in that 30-year mortgage forever. And so you protect that home that you love, that location you love, and put yourself into that situation that you really love, as long as that payment, again, doesn't strap you such that you're so uncomfortable. And again, I can help you with all of that. So feel free to reach out to me. Please subscribe, like, and share. Happy to assist, answer any questions. If you've got questions, please go ahead and send them to me. You can send them to me via YouTube here, and I will respond to you or create a video based on your question. All right, thank you so much, and we'll talk to you soon. Bye for now.